The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 22nd wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. Let's do all that we can do to make sure that we have a terrific day, and let's always remember that happiness is not in the getting. Happiness is in becoming. Think about that. Teach that to your children. You see, there's a universal quest for happiness that I believe covers these seven areas. You know, happiness is being able to explore all that life has to offer out there. That's right. Be an explorer. Be a Lewis and Clark out there. Happiness is found in having options, like doing what you want instead of doing what you have to do. Happiness is receiving and sharing, right? Happiness is reaping and bestowing. Happiness is found in taking time to enjoy what you've accomplished and giving yourself credit. You got to pat yourself on the back, folks. Sometimes others won't, especially when a job well done. Happiness is the here and now. Happiness really isn't the end result. It's about the here and now. And happiness is simply a part of the journey. And I do appreciate you spending your time on your journey with me in navigating these markets. You see, folks, the road to heaven, well, it's right here, right now. That's a beautiful thing. Hey, I would be happy to hear from you. The easiest way to do that is to pick up that phone. Give us a call at 877-927-6648. Internationally, you can call us at 727-445-1044. Remember, if you've got a question, I guarantee you somebody else has got that same question. So don't do it for yourself. Do it for someone else. A random act of kindness. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got the Dow up 12 points, S&P up 2, trading at 1943. Composite is flat, trading out at 44.20. Russell 2000 flat as well, trading at 11.13. DAX up 51, FTSE up 19. Goldilocks back $6.80. Silver up 36 pennies. Light sweet crude up 10 cents. Leading the charge to the upside, it is Google up $10 and change. Regulus Therapeutics up 89%. They have cured something out there, that's for sure. RGLS is the ticker symbol, up $6. Netflix up $6. Chipotle Mexican Grill getting crushed yesterday, up $6 right now. Alliance Data Systems up about $6. iRobot up $5. Six Flags Entertainment. That's interesting. They're up, and they just really came off of their season out there. Of course, now they should be in a down season. SIX is the ticker symbol there. They're up 11% this morning. Regenerative Pharmaceuticals up about $2 and change. Getting crushed to the downside, well, that would be Biogen. BIIB off $26, down 8%. Intuitive Surgical down $11. Altisource Portfolio Solutions off $7. Lumber Liquidators down $5.65. 3D Systems off $6. Thermo Fisher Scientific off $5. VMware off $5. Tupperware down about $5 as well. Let's go take a look at, so maybe we're going to get a little bit of a pullback of it. Let's go take a look at the ES Mini. Let's look at it on a couple of different time frames. Let's start with the 120-minute time frame, and then we'll dig down into the 30, then the 10-minute time frame out here. So what do we see inside of the ES Mini? If we take a look at just an A to B equals CD to the upside, which it hasn't completed as of yet. If I just simply come off of a swing point low here at 8 o'clock in the morning, remember it's a 2-hour chart. This is October 16th. I use that as my A point. I use as my B point up here at 10 o'clock in the evening. That was on October 19th. It makes less than a 0.382 retracement. That was into 10 o'clock in the morning, October the 20th. 1-to-1 would take it to 1950.50. So far, the high that we've seen out here, that took place earlier this morning in the 2 a.m. between noon and midnight and 2 a.m. when price got up to 1943.75. 1943.75 versus 1950. Hey, this is used as a guideline, not an exact ruler, although sometimes it works out exact. We haven't seen any kind of real reversal signal out here. You got a little bearish engulfing candle that took place here at 4 o'clock in the morning, but volume is light at that stage, so and the bodies of the candles are so small that it's kind of a little bit of a grain of salt that you've got to give to it. If you come all the way back to the swing point low that took place at about 2 o'clock in the afternoon on October the 15th, and we start counting our wave counts all the way up, what you can say is that as we got up into the 2 a.m. session, you may have gotten to your 7th and final peak out there, and so that's a possibility. That high has not been taken out, so that is still in place out here. What we've seen is just simply a market just kind of move sideways. There's no other real patterns out here. There's no price hasn't moved up with less relative strength out here. There's nothing really weak about the stochastic, about the MACD, about the relative strength indicator. There's nothing really that is weak out here as we take a look at the 120-minute time frame. All that we really have to go by at this stage is that the TAS market profile resistance area, old resistance becomes new support. Well, it's acted as new support. That's at 1932.75 would be the number on the 2-hour chart out there. This pattern out here, I'll just explode it for you up on my screen out here. If you take a look at this pattern, now, it may be a little bit difficult to see because I have this as kind of like a light cyan color, but what I can tell you is that point of control level is at 1926.75. The resistance area, 1932.75 out there. You can see how that point of control is closer to the resistance than it is to the support line out there. This really says that the bears should have had control, and they didn't. So again, nothing more bullish than a failed bearish pattern. Maybe the market is just simply going to move sideways out here today. Maybe it's going to form a doji. I don't know what it's going to really do out there. But at this stage here, what it hasn't shown us on a 2-hour chart is that it has reason to continue trucking on lower out there. If anything, it says it really wants to go higher, and it's not 1950 it's after. It's more like 1971 or 1998, 2000. Which would get you back into that September 19th area out there. And I suspect that's really what the market wants to do. At least that's what the S&P wants to do out there. If we go down, we step it down just a notch out there. We take a look at the 30-minute chart out here. The 30-minute chart shows, what does this show in the marketplace? 30-minute chart, let's just take a look at its TAS market profile. Now, there was a Rhodes momentum indicator reversal signal that took place this morning. That took place at 2 a.m. Price was moving higher, doing it with less relative strength, had a dark cloud cover candle that had formed, had some follow-through to the downside. That follow-through to the downside thus far has been pretty minimal. This high has not been taken out as we speak, so that pattern still exists out here. If we take a look at the market profiles, it has not broken support. It's tested support. That support being the 1931.50-ish area. Hey, you get below 1931.50, and then, hey, voila, maybe we are going to see the beginning of some kind of retracement. That could last a day or two or even 3 out there, and that would be setting up the next real buying opportunity on this huge leg up that we have seen inside of the marketplace. I did probably a 1-hour dissertation on why I believe that the market was forming that significant bottom, the information that I used beforehand, then the information that we've received since that October 15th low. If you didn't get a chance to catch that, go catch the archive on Channel 9. Yeah, go catch the archive on Channel 9. I'm sure that will be posted in the next couple of hours out here. So the 30-minute chart shows potential signs that we should see some type of retracement out here, but thus far it has been pretty minimal, to say the least. If we go take a look at an even shorter term time frame chart out there, and we look at the 10-minute chart, if we take a look at the high that it had formed out here at the exact time was 1:50 a.m., as was forming that high, went ahead, made 4 little trough counts to the downside, got to that D, went ahead, made 7 now to the upside out here. That's been confirmed. That was coming in right as we were coming on the air at 10 a.m. So the 10-minute chart is saying, okay, yeah, things are in place to see some kind of retracement to the downside. At this stage here, it needs to get below 1934.50 in order for that to come to fruition. That is an analysis of the ES Mini, taking a look at a 10-minute, a 30-minute, and a 120-minute time frame chart. Now, one of the things that I didn't get a chance to do during the last hour was take a look at all of the other things going on inside the market. So let's go do that now. So let me just leave you with this at the moment. If we begin to see a pullback here, my belief is that it's the beginning of a pullback for a buying opportunity. Then that's what you should be looking for. And preferably one that gets all scary, because that ought to shake some bulls out of there. Now, if we go take a look at some things that are moving, let's go take a look at gold. Gold's back to $7 right now, trading out of 1244.70. What do we know about Goldilocks out here? Gold yesterday made it above the 0.382 retracement level. That was at 1246. That 0.382 retracement level I'm talking about is coming off of the highs here from July the 10th down to the low that was put in when it was that key reversal session on October 6th. Until that key reversal session gets taken out, gold has formed a bottom. It's given us all the signals that it's formed a bottom. If anything, once you get up and you do a 0.382 retracement, you typically let folks off of the elevator out here. Gold kind of has hovered at that 0.382 level. Gold's kind of doing this little side door. It doesn't want to let people know that what it's actually doing is forming a significant bottom. At some point in time, we're going to see acceleration speed, much more like we saw inside of the markets yesterday, the day before, and gold maybe just really setting up maybe it's setting up a C point of an A to B equals C to the upside. But Goldilocks wants to go ahead to the 1284.80 level. That is its next target inside of the market. We go take a look at silver. Silver's been struggling more so than gold. It's trading out at 17.18. Nonetheless, it too has put in a bottom, in my opinion. Had a nice little bullish engulfing candle session on October the 6th as gold was making its low out there. Right now you're trading and you're testing the actual swing point low, which was on October the 3rd out there. That top of that session, 17.15. You're trading at 17.18 right now. You get down to a low so far of 17.14. So you've tested that swing point. Why don't I have volume out here? Let me go see if I can. Let's go take a look at the volume pattern, see what the volume was. So on that swing point low, it looks like too much volume. The volume there was 40,000 contracts. Today you have done you've done 34,000 contracts. I'd still say the test has done a little bit too much volume, but nonetheless, at this stage here, you've rejected at least the top of that swing point as of 10:18 in the morning. Light sweet crude out here, it's up at 10 cents. Not a ton of movement here in light sweet crude. On the other hand, you've got the U.S. dollar index that is up 336 ticks, maybe a little bit more than that because of my 10-minute delay out here. So light sweet crude is holding up pretty well. That should make you say, something to think about. If you take a look at the commodities, they all really did the same thing. Well, in the case of light sweet crude, October 16th was its key reversal session. That was followed up by a hammer candle that was out here on October 15th. So at this stage here, that was after making a 7th move on the way down as I counted things. So it says you've got a pretty decent buying opportunity. Your stop is right below 79.78 out there. You're trading at 82.81 as we speak right now. That is on Texas Tea light sweet crude. If we go take a look at the currency markets, let's go with my 10-minute delay chart out here. We go take a look at the euro. We'll do that when we get back from the break. We'll take a look at the euro, the yen, the pound, maybe even the euro Japanese yen. Then we got to go take a look and see what's going on inside of Biogen, inside of brain salad surgery. We'll do that by visiting Intuitive Surgical. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 18, S&P about 4, NASDAQ up 5, Russell up $1.40 right now. So let's take a look at the currencies. Yesterday, we had a caller from Colorado Springs. I believe we were helping out and taking a look at the euro, trying to set up a potential buy. My recollection is that we went down to a 10-minute chart to look for an A to B equals CD pattern out here. Speaking of A to B equals CD patterns, next week, a week from today at 4:30 o'clock. How about that? 4:30 in the afternoon. Of course, who's going to be up at 4:30 in the morning other than myself? I'm going to be doing a free workshop for the folks at eSignal. Now, if you're not an eSignal subscriber, we've made it we've made it so that you can access that workshop. If you go to the homepage of TFNN.com, under breaking news, you'll see it says Steve Rhodes free workshop or something like that. That's a link. It'll take you to the eSignal website, their sign-up page, and you can sign up for free. So check that out. One of the things we're going to talk about is the overview of the A to B equals CD pattern, how important it is. And if we take a look at this on a 10-minute chart, we were trying to identify, because the listener, the viewer, was looking to go long the euro out there. And one of the best patterns to do that with, or to understand changes in trends and so forth, is an A to B equals CD pattern. In this case here, our suggestion was to wait the 1-to-1 A to B equals CD. The suggestion was to wait between the levels of 1.2694-ish, and as I pull this back further, or the breakout session. And where this broke out, let me actually remove a few things from the chart here just to clean it up. Where'd that thing go to? Yeah, the chart. Okay. So let me take a few things off. Nah, take that off, that off, that off, that off, that off, that off. There we go. Okay. So we can see that the breakout level inside of the euro took place right around this 1.267-ish area. Now, here's what I want to first point out. I'll expand it up as we take a look at so the price projection for the first 1-to-1 actually hit this morning. It was at about the 4 a.m. time frame. And I was up and I took a look at that. And but it was hitting that level with what? With a wide-ranging bar. You hit something, you complete your pattern with wide-ranging bars. Usually markets don't end on wide-ranging bars, and that's in essence what we have seen take place here, because we've seen price then move down to the 1 to 1.272 level. At least here we've seen the bars start to get a little bit narrower out here. We really haven't seen much in the way of a reversal signal, not yet. Now, that might come here during this next 10-minute session that ends at 10:20, at 10:30, 3 minutes, although, maybe 10:40 would be the time period. But so far, no real reversal signal. Now, if we pull this back even further, the real breakout inside of the euro began right here at this level. Right at this little swing low here, which is at 1.2642. And so probably 1.2642 is where the euro gets back to. A little bit lower than that is your 1 to 1.618 A to B equals CD. That would be 1.2636. Now, if the euro continues to move down to that area, what we will see is we'll see continued strength, or we should see continued strength inside of the U.S. dollar index. So that's the update on the euro yen out there. That is the live look at it. Let's go take a look. I'm going to go back to the other screen out here. Let's take a look at the Great British Pound. Again, a little about a 10-minute delay on this stock chart out here. If we take a look at what it is doing, so far, let's take a look at its retracement off of its most recent low out here. It, too, is trying to change a trend. It has not done the 0.618 retracement level, so probably 1.5993 is where the Great British Pound is headed to. Gets there, then it could set up an A to B equals CD to the upside. If we take a look at the Japanese yen, trade out at 107.19 or so out here. The Japanese yen looks like nothing more than a bit of a counter trend rally. This wide-ranging bar here that took place on October 15th, it has not been able to even clear the high of that or even test the high of that swing point, which is priced out at 105.203. No, 107.496. What the heck was I talking about? I was reading a different number. 107.496. So we've just seen actually a number of small-bodied candles travel with inside here. If this if the Japanese yen looks like it's setting up an A to B equals CD to the downside, that would again put strength in the yen, weakness in the U.S. dollar index. And I do expect that the U.S. dollar index has made a very significant top, a very significant high out there. That ought to eventually put some real strength inside of Goldilocks silver, light sweet crude, natural gas as well. So natural gas right now is, where is that contract out here? Natural gas down 34 pennies. 3 cents, 34 pennies. That would be a huge move. If we take a look at natural gas, I guess we'll have to do that when we get back from the breakout here. I will share with you when we get back from the break something that I have not shared with anyone thus far. But I'm going to go ahead and share it with you. This is Steve Rhodes. This is TFNN. Right now we got the Dow, the ever-ready Dow, up 28 points. The S&P up 4.5. NASDAQ up 7. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 28, S&P is up 5, Composite up 11, Russell 2000 up a couple of points. Before we went to that break, I was talking about natural gas out here, and what I was going to point out to you is I think most of you, if you're listeners, if you're normal listeners to the show, you know that I do an analysis on a number of different pieces of information that come from the CFTC, the COT data, and I typically am looking at really two sides of the trade out there. I like to understand what the large commercial traders are doing. They're presumed to be the smart money. They're certainly the big money out there. I also like to look and see what they break it down into three categories. One is the commercial traders, basically. The second is really the speculators. The third is what they refer to as the non-reportables. How do you like that? The guys, gals like you and I, we're referred to as non-reportables out there. Now, the non-reportables, the individual traders, they usually stay at the party way too long. So you know what it's like if you've ever thrown a party. Those people that stay late, now you know how you can refer to them. You can refer to them as the non-reportables. Now, inside of natural gas, the commercial traders are back to huge, less net shorts. I always take a look at things as a perspective of net short out there. That's really how you have to take a look at it. There's a lot of COT data that gets reported. I see it on Bloomberg and sometimes on CNBC feeds, Fox Business News feeds all the time. And I see a lot of those things, and I kind of shake my head because the information that they put out there doesn't seem to have any tradability, any type of correlation that you could go back and you could really take a look at it. So I'm always looking at what those two groups are doing, commercials and the non-reportables, as a percentage of open interest. And I can tell you that in natural gas, something is up there. That the big money is expecting, I suppose the big money is expecting a move all the way back up to that huge down spike that we saw, the high that was back out here in February 24th. The question is when, and trying to identify that when. And the best way at this stage to identify, we did see natural gas was trading inside of a consolidation pattern out here. I'd say that consolidation was from about the 412-ish area, maybe down to about the 371. Maybe there's going to be a consolidation since it's broken the consolidation. Maybe there's going to be a move equal to that dollar amount to the downside. We just got to keep watching maybe for a bullish reversal signal out here inside of natural gas. But what I can tell you is the smart money is saying the move down is not going to last forever out there. Hey, let's go out to Nashua, to our man Lou. Lou, thanks for calling. Thanks for holding. How are you doing today?
Not bad, Steve. How are you doing?
I'm doing good. I would be doing really better if I could find my page, though, that had the ticker symbol that eSignal uses for the soybeans out here, because I know that that's what you want to look at. So I'm going to try to type it in, see if I can find anything. But tell me what you're looking at, and I'll see if I can try to find it. So I got corn as ZC, soybean meal ZM. See, I would have thought it was ZS. Tell me what you're doing while I try to peck around here, see if I can find it.
I thought it might be a bit toppy here, and thinking of going short on the mini.
Let's see here if I can find it. Well, let's pull it up. There we go, soybean futures. Hey, how about that? That was a nice little brief pause while I was looking around for it. So now I'm taking a look at the continuous contract. Let me see. I imagine that this is trading. Is it the November, December contract? You know which one is
November?
November. So we got the X. Let me see if I can pull that up here. ZS. It would be good to look at what you're looking at out here. Let me see if I pull this up. There we go. Okay. So we've got the November contract for soybeans. Now, what this looks like it's doing at this stage, it looks to me like it is trying to from an A to B equals CD to the upside. It looks like what I see here as I take a look at this on my screen, I'm beginning to see higher lows and higher highs. So there's an indication of a change in trend that is taking place. If we take a look at now I don't trade the beans, clearly. I don't look at them too often, but that's okay. The stock chart is a stock chart. It doesn't really matter what it is. It looks like it has completed its first A to B equals C to the upside. It did that, Lou, and that was off of the low from October 1st to the high on October 7th, then about a 0.786 retracement down on October 13th. It completes the 1-to-1 A to B equals CD. In fact, right now you're at the 1 to 1.272. But I would argue that more likely what it's actually doing, it's forming its second A to B equals CD pattern. And that second pattern out here gives you a price projection somewhere right around on a 1-to-1 standpoint, right around the, looks like maybe 998 as the range, 998.75 or so. Let me see if I've got volume on this contract out here. Give me a moment to try to add that back in so we can see. Well, okay, there we go. So you got a B point from the trading session of, well, it'd also be good if I turned on the data window. Okay, so the volume on the trading session of October 15th, Lou, 225,000 contracts. Today, you're at 169. Yesterday, you did 126. It looks like. So you're pushing into a B point with volume. So it looks to me like this is moving higher, not lower. That's the way I take a look at the November contract for soybeans out there.
Okay. Sounds good.
All righty. I hope that helps you out.
Yeah, it helps me out a lot.
Yeah, so I think you got your second A to B equals C to the upside. Looks to me like this has changed its trend out there. All righty?
Gotcha. Thank you.
Okay. That was Lou in Nashua. That was taking a look at the November contract. So it looks like all these commodities. So I'm glad that Lou called about that. That's cool because when I take a look at, look, all these commodities are priced in dollars, right? And we know that we've seen a huge move up inside the U.S. dollar index. When I take a look at the CFTC analysis of the U.S. dollar index, it says that the big boys, and this was the thing that kind of like, I had to just step back for a second because the euro had been getting crushed. You had Super Mario Draghi saying he was going to buy all kinds of every bond that he could, turn on the printing presses. Of course, what we know about those guys is they're nothing more than a marketing machine. They actually have done basically zilch, I think, out there. Remember back in the August 2011 timeframe, what did they call that? The European Economic Stability Fund or what have you? What a bunch of BS that was. Before Steve is really what I'm referring to. They never even funded that whole deal. It was nothing more than marketing stuff. That's in any event, that was nothing more than marketing stuff that was out there to just kind of help stabilize the market out here. That's something that they're good at, and of course, people buy into the news and they just kind of forget it out there. But as the euro was crashing down, and what I think was, when I see something come across my screen yesterday, that was it David Taper is that who I saw that was saying he was short the euro out there? Of course, do you really want to believe that? I think he was trying to wanted to be able to get out of his positions, and he wanted to maybe sell those to you. I think that what the big money is seeing out there, or is saying out there, is that however it's going to happen, I don't know. But it's saying the U.S. dollar index is probably going to crash just as hard as it rose to fame out here recently. So we'll see how that plays out. I can just simply tell you what the big money is doing now. We're starting to see some changes in direction with regard to these commodities, making A to B equals CD up patterns out there. Everything is being done very slightly. So, but at some point in time, we should see a lot of these commodities just take off, much like we saw the market do over the last several days. We take a look at the indices and so forth. So I suspect that. So Lou, thanks for calling, because I don't look at soybeans pretty much ever out here, and so it's just an additional potentially confirming. Said, no, look, what I'd really have to do is I'd have to put soybeans up here. Let's go ahead and do it. Actually, let's just see what soybeans looks like. Again, this is just simply the November contract. Let's go ahead and add the U.S. dollar index here. So let me see. I got DX. Now, the problem here is this is going to be just slightly delayed, but that's not really a big deal. Times -1. That's how I get it to convert out here. So that's a cool little feature. Well, let me get rid of the volume pattern out here. Well, why didn't that work? Insert. Well, it's not working for some reason out there. It's probably I have to. I think that I need to put a space. I think that's what it is. So let me try to do that one more time. But let me turn off the volume on this chart out here, and we're just going to see if I can pull it up this time. I will, and if I can't, then I'll figure out how to do it during a break or something, so I don't waste your time. But let's try to insert the symbol for the U.S. dollar index. Okay, times. I think I put a space. Maybe it's just space. Try that. Let me try one more thing out. Oh, there we go. It did work. How about that? See, you just have to be diligent. Stevie, diligent Rhodes out here. Now what we're going to do is let's move this up and kind of make the screen. So there is the U.S. dollar index. Now let's go ahead and make this a line chart out here for both of these. It's going to be a little bit easier, I think, for us to look at. And so we'll make this, instead of a bar chart out here, let's go ahead and make these things... instead of candles in a bar, let's make these things line charts. Okay, we'll make that just a little bit thicker, so we get to see the correlation here between the U.S. dollar index and soybeans. So we're going to make this a line chart at the bottom as well. Let's make that. Should we leave it the same color, or should we change it? Maybe change it to red. Yeah, so we get red, white, and blue on our screen. Yeah, we got to do that, but we have to be patriotic. So the red line out there is the U.S. dollar index. Let me get rid of the A to B equals CD pattern out here. And it looks like I gave the soybeans maybe just a little bit too much room. So the question is, do you think there is a correlation between the U.S. dollar index and soybeans as we take a look at this? You'd have to say the answer here is yes. So my thoughts then, as we take a look at this, and again, thanks Lou for calling in and asking about this. Knowing, and here I'll put this on the screen here for you one more time. Now, there's a couple different ways that you can take a look at the what the large commercials are doing with regard to the U.S. dollar. One of those ways is to just take a look at the U.S. dollar index futures out here, which is the chart that I'm going to put on my screen here momentarily. Another way that you can take a look at is you can do really all the currency pairs. You see, they don't take a look at the Mexican peso and a number of other currency pairs to figure out the U.S. dollar index. It's only made up of 6 currencies. It's made up of the euro, the pound, the yen, the Canadian dollar, the Swedish krona, Swedish franc out there, Swiss franc out there. So, but you can go further. And if you do go further into the other currencies, because it's just simply a math calculation out there, I don't have anything to compare it to, which is why I just do the U.S. dollar index out here. But if you were to take a look at all the currencies, the large commercials, if they mean anything, I believe that they do mean something, they are at the all-time highest net short position ever since the data began keeping track of. Now, you're going to see something that's also similar, but doesn't show it at all-time highs out here as we take a look at the U.S. dollar index. Now, this is data as of last Friday. The data comes out at 3:30 p.m. You can type in, you can Google in CFTC, COT data, and it'll take you to all the different links where you can download those files and do your own analysis and your own work out there. So, the big money is often, they're early to the party. So the big money, they get early to the party. They don't stay late like the non-reportables do. But the big money gets early. Why do they get there early? Because they've got to put on large positions, and so they're maneuvering out there. And so what they are suggesting, like I say, I don't know how it's going to happen, how it's going to unfold out here. And can they be wrong? I guess the answer is yes. But I can tell you at this stage here, the way things are playing out, and what we're starting to see take place here as we take a look at some of these commodities. So you got soybeans. Let's take a look. I don't know what else has been trashed out there in the commodity sector. Has corn been trashed? I don't know. Let me see if I can just put up the corn contract out here, see if we see the same thing. So we know that you got a direct correlation here with the U.S. dollar. You'd almost have to say, if you looked at the two charts, right, the bottom portion of the chart is soybeans. The top portion of the chart is the U.S. dollar index. It's inverted, by the way, right? So in this case here, a stronger dollar is moving lower just so that we can see the correlation. To me, you're trading one and the same, are you not? I mean, when you take a look at it, you clearly, to me, clearly you are. Let's take a look at corn, just see, and we'll put that up at the top out here. Oh, I didn't like that. So I thought ZC would be corn. Oh, maybe it's not the November contract. That could be the problem out here. Let me see if I can get a December contract. That ought to do it. Let's see if we get, there we go. So there's a December contract. So here, you take a look at corn. Take a look at corn back here as it was making, looks like a high maybe on May 8, 2014. The U.S. dollar index had made a low on May 6, 2014. How about that for some kind of direct correlation out here? We are seeing here inside of corn, we're also seeing the beginning of A to B equals CD patterns to the upside as well. So we're seeing it take place in essence in all of the commodities. Well, not all of them. Gold, silver just kind of hanging on by its chinny chin chin, but certainly corn, certainly soybeans out there. Something to think about. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 8, S&P up 4, Composite up 11 points, Russell up about $3, DAX up 51, FTSE up 20 points out here. Let's take a look at a couple of stocks before we close out the hour here. Biogen, BIIB, down $23 and change, trade out at 303, so it's down 7%. Looks like they beat their top line out here. I don't see the bottom line numbers out here. Let's not, well, wait a minute. Net income, the company was up. So net income, third quarter GAAP income was up 76%. It sounds to me like they might have beat it. Maybe they didn't make, consensus. Third quarter revenues was up 37%. How do you like that? You only grow revenues by 37% and you grow income by 76% out there. That is the type of cut, paste, and assemblers, the CPAs, that you want working for you, because that's doing some magic out there. Now, let's go take a look at what the stock chart here has done. It has pulled back into a breakout session. Now, in essence, one would say it's pulled back with too much volume. So it came back to the breakout that took place here. This thing broke out, literally broke out on July 23rd. Remember, you come back to a swing point a couple of days earlier, or a very, very low volume bar. That would be the July 17th swing point low. That's at 298.31. You're trading at 302.60. Now, volume was 4.1 million shares on that breakout session. It's pulled back so far with 3.3 million shares. So it's pulling back with a ton of volume as we speak, but it has not been able to bust it out. This sets up now more of a consolidating pattern, unless it can bust it down, than anything else inside Biogen. Now, I don't know where Biogen is in the IBB as far as the weighting out there, but as Lee Corso would say, today's Wednesday, right? We're halfway through the trading, and not exactly halfway through the trading session, but he might say not so fast. Well, let's go see what he would say by going and taking a look at the weekly chart out here. If we take a look at the weekly chart and get an idea for what it's actually doing here, the weekly chart has a swing point from April the 7th, and that's got nearly 12.3 million shares for the week, and you've done 6.7 million shares through today, and it's pushing into that swing point. We'll see if tomorrow and Friday, if the volume keeps up here, but at this stage, that high is 301.45. If Biogen, BIIB, closes below 301.45. Pretty good chance you're going to see it go test 273.73. That is the low of that swing point out there. We also have this nice wide-ranging bar, so it's either that swing point low or maybe the top of November 18, 2013, another 9 million shares to the upside around the 289.97. But first it's got to bust through the 298.31 level. And that's what one of the weakest link stocks today is doing inside the market. And I'd have to say, not too shabby out there. Percentage-wise, 3D Systems, let's take a look at that, down 15% off $6 as we speak. It's the weekly chart on my screen right now. Let's go see what this is doing on a weekly basis. This thing had a sign of strength that is pulled back into, looks like from April 29th, May 6th, the week of May 6th, 2013. There was 48 million shares, so it's pulling back into that area with light volume. There was 49 million shares. You've only done 11 million shares so far to date this week. So it's pulling back into a area sign of strength with some light volume. Maybe this gets down and tests the high of March 18, 2013, 32.33 out there. Let's see what it's doing on a daily chart, see if it's blowing something apart out here. It is down with some volume out there. Got this nice little high volume swing point out here. It looks like at some point in time, 3D Systems will make its way back into about the 69 to 60 type level. Well, folks, it is Wonderful Wednesday as always. Thanks so much for being here. Have a terrific day. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.